Hello everybody and welcome back to my channel. In this video I'm going to share with you a winning trade breakdown that I took of a day trade taken trading pound against the dollar. We'll get to the charts and I'll show you the exact strategy that I used that managed to make me 4 times what I risked for this trade, which was an especially nice winner because it was also my birthday. If you're new to my channel, my name is Emily. Welcome to Mindfully Trading. On here, I share educational tips to help you to day trade the Forex market, as well as an insight into my journey as a Forex trader. I originally started day trading the stock market over 5 years ago, and since then I've switched to day trading Forex. I currently trade with the broker IC Markets in my live account, and I also trade with the 5%ers, who are a prop trading firm. That's where I trade their company capital and we take a share of any profits made. If you want some more information about prop traders in general, I have created a separate video which I'll include a link to above. And I'll talk a little bit more about the 5%ers later in this video. But for now, join me as we jump onto the charts. All of the software that I'll be using is linked in the description below. Please remember to like and subscribe, and let's go. Okay guys, so here I am in my broker in MetaTrader 5. This is the account I have with the 5%ers, and you can see here in my history, this is the trade that I'll be reviewing in this video with you today. Now I actually took 2 positions here. It was a short. They are for the same position. In fact, I was going to extend the profit target on one to reach for more profit, but in the end, I decided to just get out with my profit, mainly because it was a Friday and I wanted to walk away with a nice win on the week. So this is the data for the trade that I took in the live market, but to better understand why I took the trade, let's hop onto TradingView. Right, I've hidden all of my drawing tools from you so we can look at a really nice, clean and clear daily chart. And you can see here that we started the week on Monday the 26th on a bank holiday here in the UK, which could be why we have experienced such a small candlestick, hardly any volume, hardly any movement. Not what we want for day trading. On the Tuesday, we made a new high. Wednesday, we had almost mirror bars as we broke back down below, but Thursday was the most interesting candlestick this week on the daily. Why is that? Because we got a close below this key level. Zooming into this now on the daily, you can see that as we got a close below this level, it shows a temporary shift, a change in behavior from the strong uptrend we've been experiencing to this new little downtrend forming. Now, is this a long-term reversal or is it a pullback? Nobody really knows for sure, but right now it's safe to say that pound dollar is coming down. Enough so that on the Friday, I decided to take a short, a retest of this area. But why did I take that? Well, what I'm going to do is I'm going to use this bar replay tool and remove Friday's candlestick data and show you exactly the steps that I took to calculate this day trade. Once I'd established from the daily time frame that we had a bearish close on the Thursday, we broke this key level and we were coming down. That was enough for me to determine that I was looking for a short position. But where was the best place to get in short? I didn't want to just buy as soon as Friday's market opened. To calculate this, I dropped down to the 4-hourly time frame. And this is what I saw. You can see that we have almost a head and shoulders pattern here. As price pushed up, we formed the left shoulder, we formed the head, but the right shoulder could not break the head and it closed and broke below this line. Really key piece of information, and that was when I thought we should look for a short. Before I drop down to the 15-minute, which is the time frame I use to actually calculate and set my trade, there's something else I gained from the 4-hourly, and that was in fact these candlesticks here. The way that price had come down, it made this quite bullish candlestick here with a wick rejecting this institutional price level. And then it came down again and just consolidated out. Now I was looking at this at 6 o'clock in the morning GMT before the London session opened. And from this, I felt that although price was coming down, we likely needed to have a pullback up. And that was when I decided I wanted to go short, but I didn't want to buy down here. I wanted to be short up here. But where exactly do I go short at? Well, that's when I dropped to the 15-minute time frame, the time frame I used to set my trade. And you can see the exact same pattern we were just looking at, this head and shoulders pattern. if you want to name it. Now I'm going to zoom in on this leg here from the head down, because this represents the start of the new downtrend, and this is the information I use to calculate my entry short. From the very top of the head, price is coming down, and we broke this key level here. We then pulled back and we made a new level here before we broke this previous level here. Now this is forming a new structural level here, which is the level I used to place my Fibonacci retracement from. Using the bodies only, I dropped it at the low down here. And this gave me my 3 levels of optimum trade entry. The 62%, the 70% and the 79% levels, which also in them included an institutional price level at the 1.32, which is an added level of confluence for me. It is always helpful when you have multiple components working together to formulate your trade plan. It makes it a better quality trading decision. And so I did 2 steps to this trade. First of all, I set an order, a sell limit at the bottom of this fib tool. I set it at 1.3197. But where was the best place to place my stop? Well, we have this huge fair value gap here. And there was a high chance that price would want to fill this gap, so I knew my stop had to be above this level. And I wasn't convinced that it wasn't going to break this either. So I decided to set a large 30 pip stop. Now in hindsight, this is a really big stop, but I was setting this sell limit in advance and I didn't know that I would have time to check my chart, so I wanted to give the trade room to move. To compensate for the large stop, I also set a large target, a target break in the lows, and a positive profit loss ratio at 2-to-1, which means that I would be risking 1 to make 2, risking 1% to make 2%. I then set an alert here on TradingView at my entry and I walked away. My alert went off when price came and tapped my entry at around about 9 o'clock in the morning GMT. And when I looked at the chart and I saw this candlestick here on the 15-minute, it was a nice little bearish candlestick. We had a smallish body, we had a larger wick rejecting the fib levels. That was when I decided to actually add to my position. So I set another sell order. Not long after, we had this lovely candlestick come in on the 15-minute, a bearish engulfing this whole little pullback area and bringing in some much needed momentum, which is a really nice confirmation signal for me that the trade was going to go in my favor. So at that point, I simply set an alert at the stop, an alert at the target, and I walked away and continued with my day. As the New York session opened, it gave the volume that was needed for price to drop down to my target area, and it just gave me a nice total of 4% winnings on this trade. And if you're watching this video, you're feeling a little bit overwhelmed with some of the terminology I'm using or maybe some of the concepts, I've recently launched a book this year, Forex Trading 101. It's a complete guide for beginners to help you to learn how to trade. So there'll be a lot of information in there covering what I'm talking about. I'll include the link below in the description if you want to download a copy for yourself. Meanwhile, for those of you who are interested in the progression of my account with the 5%ers, the prop firm that I trade with, here is a look at my trading dashboard. It's a little bit slow at the moment. My growth is slow, mainly because it's summer trading. And the win I've taken this week has been the largest win I've taken for the whole of August. It's been a slow month for trading during the summer, but it's nice to see that my account is still growing. I'm still green, and that's the most important thing for me at the moment. As traders, it's super important to know when is the best time to push and when is the best time to wait, to sit on our hands and avoid over trading, which has certainly been where I've been at the past few weeks. But I'm hoping that as we're entering into September, that perhaps we'll start to see some more volume and some more movement come into the markets, and with that, some more profit potential. But that's why I love the account with the 5%ers, because all of the programs they offer 3 different programs. They offer Hypergrowth, which is the program that I'm currently enrolled into. They offer High Stakes, and they offer the Bootcamp program. And all of those programs offer unlimited amount of time to pass the challenge. So usually with a prop firm, you will receive only 30 days or something similar to hit a profit target, which, trust me when I tell you this, that is stressful. But with the 5%ers, they've removed this deadline so that you have more time to focus on your trading, on your performance, rather than on hitting targets. It's a big game changer, and it's why I recommend them as a prop firm. So if you are consistently making profits as a trader and you're ready to take your trading to the next level, I definitely recommend the 5%ers. There's a link in the description if you want to check them out for yourselves. But I hope this video has helped you out. I hope you've taken something away from it. Do let me know any questions you may have in the comments below, and let me know how you've done this week trading. Have you had a good week? Are you green? Are you red? It's always great to hear from you. Once again, please drop me a like if you've enjoyed the video. Don't forget to subscribe. Thank you so much for following me on this trading journey, and I'll catch you in my next video.